Hello, and welcome to our December edition of Economic News versus Noise, brought to you by Advanced Projections. I'm Rich Vessel, the founder of Advanced Projections. So let's take a look and see what is the latest in economic news for the U.S. this month. First, we're going to say what's in the noise. So what we're trying to get you to do is to look beyond the superficial headlines and determine what is going on underneath in the actual statistics that reflect the actions in the economy. So here's some of the noise that happened at the end of the month in November. Unemployment dipped down to 4.2%, much lower than expected, but the number that they gave, 210,000 new jobs, was pretty low. So why is this number or these pair of numbers so disparate? Inflation is a huge concern. Well, the news is so far it isn't, and we'll show you the evidence in a minute or two here why it isn't. COVID vaccine mandates and pushbacks have threatened the economic recovery. That is the claim. Now we have the Omicron variant to deal with. The second part of the infrastructure program, much larger, Build Back Better, is still bogged down in congressional debate. However, the government funding and debt ceiling crisis, which was manufactured to occur in December, came and went with barely a whimper, and they punted it out to February of 2022. So look for more nonsense on that topic in just a short 2 months. We have high gas and energy prices. Well, the news part is they're already going back down. Oil retreated 20% by the end of November. Stock markets began that month in euphoria, ended the month in slow retreat, and the question is, what's going to happen next? Third quarter 2021 corporate earnings exceeded estimates in over 80% of the companies that reported. So these new equities markets records, people think that, well, this is showing the U.S. economy is robust and growing, when in fact, what's really feeding this is this continuing flood of cheap cash, much of which is being spent on pumped up and overvalued speculations, not just the equities markets, but in crypto and a few other things where, they're really not going to be productive over the next 18 months. So in the news, what we really want to point out in all of those noise factor items that we provide is the large dip in unemployment really was due to significant workforce and employment expansions, which literally were obscured by that smaller $210,000 new jobs number. So what we're looking for is that number to be revised upward in January and February, because the underlying numbers were much larger. Long-term inflation concerns are not reflected in the prices of precious metals, which normally accelerate upwards if the smart money is concerned about facing long-term inflation. So in 2021, gold has been flat, and silver, platinum, and palladium have actually been declining. Fed comments and actions feed the belief that inflation will be kept in check, and hence keep a lid on these prices and in fact apply some downward pressure. We here at Advanced Projections will watch for telltale changes in all of these trends. So the first infrastructure bill passed. What sectors of the economy will actually benefit and when? Well, we really have to wait for new state legislature sessions in the first half of 2022, because those are the folks that are going to decide where to spend their allocations. And these allocations by state are enormous. I was just on vacation in a smaller state, Hawaii, and their share, even though it's a state of only about 2 million people, their share is going to be a couple $1 billion. And they're going to have to decide how to spend that money. Now, if you look at state populations, the amount of money these states are going to have to decide what to do with are going to be more or less population based. So, if a good rule of thumb will be $1 billion per million population. So a state like Ohio will have 9 billion. California is going to have over 50 billion, and so forth. But that kind of expenditure requires extensive planning, large projects, and those significant projects are not going to begin until well into 2022. The Federal Reserve did hold its open market committee meeting in early November, and the next meeting is in a couple of weeks in December 14th and 15th. So the FOMC is now at a turning point regarding their traditional mandates when unemployment now is closing in on 4%, and inflation is still running at about a 6% pace for the whole year. Full employment means employment soon to be below 4%, with the last low pre-pandemic at 3.5% in late 2019. Now, we actually look at these very low unemployment numbers to be a harbinger of the end of an economic cycle. The November FOMC contained a change in rhetoric and planning, where they issued firm guidance about the next steps in managing the health of the economy, just as we predicted before the meeting in our most recent videos. The December meeting is likely to confirm this stance, along with potential for hinting of an acceleration of their stated plans in the first quarter of 2022, based upon the latest inflation and employment numbers. So we believe they're also concerned about speculative excesses, which still remain out of control, and they may include some comments on this within the December or January reports. Now, we're repeating this from our last news versus noise. There's a misconception out there amongst the general population that the Federal Reserve is somehow owned and manipulated by a secretive group of wealthy global individuals and operates without ever being audited, or in fact without much control. And the fact is, the Federal Reserve is privately owned by over 3,000 commercial member USA banks. That's who owns the stock in the Federal Reserve. And it is audited regularly, and the results are published and easily locatable out right on the web. Looking at the sea of equity euphoria, which may be tempered now. We've seen a lot of sideways movement in the indices, and the last little jolt it got was from the onset of Omicron just a week ago. So, there are still pressures on trying to keep a lid on rampant speculation in equities. But these two charts, which we've updated, show the Cornell Capital Group's unprofitable index, which reflects the amount of money and the number of stocks that are still not earning anything, do not have positive earnings. And in the Russell 3000, the chart in the upper right here of this slide shows how the number of companies, which is about 2/3 in the Russell 3000, are still losing money. Now, peaks in these numbers of companies that are losing money have occurred prior to recessions and the associated market crashes. So it's something worthy of paying attention to as items which foretell what what might be happening. So this is another little repeat, because this is something every investor should understand. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. We have experienced exactly that since the beginning of the bull market, right after the COVID correction. And we still have reasons to be euphoric, but that's also, something to temper your thinking that this party has to eventually end. And people that have been through, 4 to 7 of these major market pullbacks are certainly well aware of what can happen. All we're looking for right now is a significant triggering event to pull the plug on this current bull market. Well, thanks for listening. Please consider giving our video a thumbs up and subscribing to the AP Newsroom YouTube channel. You can get free limited time access to our full member reports via the first link in the description below. And you are certainly invited to join our free economy monitoring group on Facebook and join us as a subscriber for advanced projections. Please give us your comments and thoughts and questions in the comment area below. Thanks very much for listening, and we'll be talking to you soon with our regular monthly update.